Good morning, YouTube. Welcome back to another episode of Stock Analysis. Your host, truly, the one and only Akinomics. And today's stock that we'll be analyzing, if it isn't obvious enough, Microsoft, with the ticker symbol MSFT. So, following last video, which was Apple, I thought mine must be fitting to do another tech stock in the tech sector, which is Microsoft. As you know, amazing stock. Everyone knows Microsoft. It's another one of those go-to simple stocks. People think of Microsoft and they don't think, oh, that's a terrible company, right? And today what we're gonna do is analyze and see through fundamental analysis why Microsoft deserves that title. If it does deserve that title, we'll try to answer the question today. So when we see right here, right now Microsoft is trading at $240.74, and actually had a really good day today. Went up 3.37% or $7.84. And if we look at our 52-week low, 232, that was like what, yesterday that it was around there? A few days ago. $240.74. We look at the 52-week high and it's $349.67. That's a 33% drop. Remember in Apple, we had a similar thing. I believe it was around like a 25% drop. These are very important patterns to look at when it comes to trying to understand the stock market in totality. So, a lot of people know what Microsoft is, but do we know what Microsoft does? And a lot of people might think, oh, the simple stuff, Xbox, Windows, but Microsoft has a lot more than just that. So, what does Microsoft do? Microsoft engages in software development, services, and business sectors such as Microsoft Edge, Office 365 Windows, and Xbox services. So, where does most of Microsoft make its money? Comment down in the comment section below. I want to hear your guys' guess. I'll give you guys a few minutes to go down and comment what you guys think Microsoft makes its most money. And I'm going to break it down for you right now. Alright guys, let me know if you guys are right. So, as we can see from this nice pie chart right here, it makes most of its money revenue from 35% from intelligent cloud. Next, more personal computing, 34%. And after that, productivity and business processes. So you must be wondering, what is intelligent cloud? I'm going to break it down for you. Intelligent cloud is cloud services. Basically, when businesses need to store their data, need to store anything, they put it in the intelligent cloud. A few examples of these services: Microsoft Azure, SQL Server, Windows Server, GitHub, and Enterprises servers. These are just a few that Microsoft owns. They own a lot more, trust me. Next would be more personal computing. Think of it as more targeted to consumer products, right? So Windows, Xbox, search engines, advertising, things like that. And 31% productivity and business processes. I mean, that's pretty self-explanatory. Think of it as products intended to make workflow more efficient and more productive. Some examples could be LinkedIn, and Microsoft Office software. See how I mentioned LinkedIn, right? It isn't just for businesses, it's also for people. Just wanted to put that out there. So, if you remember from Apple, so the first thing that we'll be talking about is the PE ratio. Now remember, the PE ratio is the price of a stock divided by the earnings per share in it's like the average of 5 years. So you want to take the average of 5 years and divide it. All right, guys. So the 5-year average of the price of the stock, the 5-year average of the earnings per share. So it's very simple to find, right? Just go on Google, and every single website that I use will be in the description below if you guys want to do your own research as well on different types of stocks as well. And if we look right here, we have our average. It tells us right here, P ratio, average of 35.14. And remember, our goal was 22.5, meaning that Microsoft right now, if we were to buy it at $240.66, we wouldn't be really getting a good deal. It's a little too pricey right now, according to the PE. Next, what we'll be talking about, number 2 of our fundamental analysis, is our 5-year ROI. Remember, guys, ROI is return on invested capital. Okay, return on invested capital. We want to make sure that Microsoft is seeing good returns on what they're investing in, right? For any good company, we want to make sure that what they're investing in, they're getting good returns on, all right? So we have data points. Very scary, I know, but we're going to break it down for you guys. Well, I'm going to break it down for you guys. What we want to do is we want to add up each single percentage you see right here. You want to add it up. And once you add up the percentages, you want to divide by 500. All right? And when we do that, we get a high ROI of 19.8%. And we want that ROI to be above 9%. That's an instant check right there. Instant check. Normally with tech stocks, we saw the same thing with Apple. Normally with tech stocks, they kill the return on invested capital. All right, guys, they kill the ROI. They always do. They always get the big green check. The third thing we want to look at when it comes to our fundamental analysis is revenue growth over the past 5 years. We want to see revenue growth in 5 years. And before I continue, I would like to shout out Pedro Cruz Trading for showing me this website. I've been going over it, looking at all the financials, seeing how this would help me as an investor. And if it helps me as an investor, it will definitely help you guys on your journey of investing. It has almost every single piece of information you need when it comes to fundamental analysis. So one more time, I want to shout out Pedro Cruz Trading. I will link his YouTube channel in the description. He does day trading, which is another form of not investing, but another way to tackle the stock market. So if that interests you guys, you should go to him. He has a lot of information to help you. But revenue growth, I'll repeat it one more time. You want to make sure that there's revenue growth for the past 5 years. So we want to make sure that Microsoft is increasing their revenue so we can go to their financials and check their income statement. So this is how we would do that here. So as I was saying, we want to make sure that there's revenue growth over the past 5 years. We want to make sure Microsoft is increasing its revenue. So in order to see that, we're going to go to their financials. Financials right here. We just click on it. We're going to look for sales revenue. 2018, they made $110 billion. 2022, they made $109.27 billion. Huge check right there. They're making money. That's very important. Net income growth, which it is different than revenue growth. All right, guys. We want to see net income growth from the last 5 years. And if we check that right here in their financials, sorry guys, let's scroll down. 16.57 billion and to now 72.74 billion. Big check. Microsoft has definitely done that. They've increased net income. They're making money, guys. Next step in our fundamental analysis is shares outstanding. A lot of investors overlook shares outstanding, which is a huge mistake. Shares outstanding is as important as any other step. Why is it important? Because if the shares outstanding is decreasing, remember guys, you want the shares outstanding to stay the same or decrease. Alright, you want it to stay the same or decrease. If it's decreasing, the company is buying back more shares and they're increasing your ownership of the company. If I have 1/10 of Microsoft and now they decide they want to buy back 2 shares of the Microsoft, there's now only 1/8 of Microsoft. Now my one is more of a percentage. I own more of Microsoft. However, if they're increasing the shares outstanding, they're selling more shares, they're diluting you as an owner. We have 1/10 of the share. Now they want to sell 2 shares. Now you own 1/12. You own less of the company. Remember guys, the huge word right there, diluting. Now as we see here in our Microsoft, from 2009 to 2022, as you see, look at that huge drop. They've been decreasing the shares outstanding. So that's a check right there. One important note about shares outstanding though, we don't want companies buying back if their company is overvalued. Remember that guys, because now they're buying expensive shares. And we don't want, who wants to buy expensive shares? Do you want to buy expensive shares? No, we want to buy them when they're cheap. We want companies to do the same thing, guys. So remember that too. Last but not least, debt. Remember, debt isn't bad. However, we want to make sure our company that we're investing in, right? Remember, when we buy a stock, we become an owner of the company. Doesn't matter if it's one stock. Doesn't matter if it's 0.00001. It's a fractional share. It does not matter. We are now a part of that company. So we want to make sure our company doesn't have too much debt. Okay? Because when times get rough and we have a lot of debt, it gets scary. But if we're able to pay off our debt, because we don't have a lot, when the times get rough, we're in a better position than any other share or any other stocks out there that can't pay out that debt, right? So what we're gonna do to find out how much debt we have is we're gonna look for our free cash flow right here. We're gonna add all these up. When we add them up, we get $236.9 billion. Now we want to make sure our long-term liabilities is less than $236.9 billion. So what we're going to do is scroll up. Look, it's not too far. Alright, sorry about that guys. Had to take care of something really quick, but I'm back. And now, well, just to recap, we're looking at debt. Remember, debt isn't bad, but we want to make sure that our company could pay off its debt when times get rough. Like in the current situation we are right now. We want to add these up. The 5-year free cash flow, we get $236.9 billion. We want to look at our debt. We're going to go to balance sheets, guys. And we're going to scroll down to liabilities right here. And we're going to go right over, where was it? Right here, long-term debt. $72.36 billion. And that's a check right there, guys. We could easily pay it off. So from the looks of it, Microsoft seems to have strong fundamentals. Now, well, most of you are probably here to talk about price. I believe Microsoft is an amazing company, right? It even has a dividend, right? A dividend of, was it 0.68? It should be somewhere around here. Yes, right here. Dividend yield of 1.13%. I like dividends, to be honest. We're gonna restart that. So as you can see, guys, Microsoft has strong fundamentals. But now comes the hard part, which is, should we buy? I am not a financial advisor, so please do not take this as financial advice. I'm only here to give you information, and I'm only here to give you my opinion. Remember, this is not financial advice. I am not a financial advisor. I personally believe that Microsoft right now is too expensive. I think that I believe Microsoft is overvalued. Remember our PE of 35.14. I believe that Microsoft has a lot more ways to go in going down and getting beat down the market. We did have a really huge rally today, big green day for Microsoft, but I don't think that's gonna last long. And I believe that throughout the month of October, we're gonna see Microsoft continue getting beat down and beat down and beat down. If we want to look at the more long term, right here when Microsoft was around its high, as you can see, it just trends downward and downward and downward and downward. And I think it's going to keep going downward. I do think that since this company is still close to its 52-week low, that it should still be on your watch list. You should look at Microsoft every single day, either when the market opens, the market closes, in the middle in between. Set up price alerts. I say that if I were to invest, remember, this isn't financial advice. I'm not a financial advisor. I would probably I would look at this stock at around $190 or $150 on the more medium side, right? So on the higher side, $190 if I want to look into it more, and medium side, $150. Remember, guys, another huge thing on why I say why Microsoft is high valued, overvalued. Don't forget, everyone looks at Microsoft and sees it's amazing a company, right? Which it is. It is an amazing company. However, we don't want to overpay for an amazing company. Alright, guys, that concludes our stock analysis of Microsoft. If you guys have any stocks you want me to look at, any stocks you want me to tackle, leave it in the comment section below and I will tackle them. If there's any terms that you guys want me to explain more in detail, I'll be happy to make a video on those terms. I have a few affiliate links. Webull, if you guys are new to investing, click on my Webull link and we both get like 10 stocks, 10 free stocks, random. And check out my affiliate link for Coach Greg. If you guys need any harder than last time supplements, use code Akinomics, 10% off. Thank you guys for watching. Please like and subscribe, and I hope you guys enjoyed.